Mike's small pizza company has been thriving, and he started thinking about taking the company public. He could use the capital that he raises to expand his business. Going public means selling some of the company's stock to outside investors in an initial public offering, and then letting the stock trade in public markets. There are many advantages to going public. Some are that it facilitates raising new corporate cash and establishes a value for the firm. Some disadvantages are the cost of reporting quarterly and yearly results, disclosing all of your company's private information, and giving control of your company up so that it can be publicly held. Mike will need help with this process, so he contacts an investment bank and hires underwriters to sell his stock. Underwriters may work on a best efforts basis, which means they will try their hardest to sell all of the stock, but will not be liable for any that they do not sell. Mike will need to create a prospectus, which is a summary of his company's information for potential investors. A preliminary or red herring prospectus may also be issued before the stock goes public. This is an incomplete summary and is usually issued while the company waits to get approved by the SEC. Next, the underwriters that Mike has hired will go on a roadshow, meaning they will travel around the country giving presentations and finding investors for Mike's company. A quiet period will occur for 40 days after the stock's registration period is made effective. This is to ensure that all investors have access to the same information. There are many costs associated with going public. Underwriters will charge a spread, which is the difference between the price at which an underwriter sells the security and the proceeds that the underwriter gives to the issuing company. If the current market conditions are not favorable right now for an IPO, Mike's company can use a procedure known as shelf registration. This means that the company can get their registration procedures out of the way and then wait until conditions are better to issue stock. This will all take place in the secondary market. After Mike goes through this process, he will have a public company that is traded daily on a stock exchange. Not bad for a young man from Emporia.
Created using Powtoon.